Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, February 28th. It is 6:48 as I'm starting the video. Taking a quick look at futures. Equities off about 1.4%. Gold up 1%. Oil up 5%. Copper up 1.25%. Bitcoin down 2%. On the macro front, we've got international trade, Chicago PMI, Dallas Fed, plus I think we've got a couple of FOMC speakers this afternoon. Also, we've got Jay Powell on Capitol Hill for his semi-annual testimony. That starts Wednesday and then follows up on Thursday. Earnings, I didn't have many before the bell, but after the bell today we've got Lucid, Zoom, Workday, 3D Systems, and Blink Charging. Before I get into the video, don't forget to run your player at 1.5x, especially if you're new here. I think that's the right speed. You won't miss a thing. But I wanted to talk to you about the state of the markets. Obviously, we had a gap down last night in futures, which about half of it recovered. I think the initial plunge was about 3%. Don't forget this morning, just like any other day, mark the pre-market lows for whatever stock you're trading. The regular session price has a way of finding those extreme levels overnight, whether it's today or in the very near future. It usually finds those levels. So we've got really three things going on. We've got the war, we've got the Fed, and we've got our charts. So what we've got to essentially do is come up with a game plan on what it all means. Now, obviously, we've been getting jerked around on war headlines. I think there's no way around it. You're going to get good news, and then you're going to get like Thursday and Friday, and then you're going to get new developments, and then you get this morning, and then just a lot of head fakes. I don't think there's any way to trade that particularly unless you want to just guess. I don't like those odds. But then we've got the backdrop of the Fed that by all accounts is going to be raising rates in a couple of weeks at that March Fed meeting. Also, their bond buying stops as of, I don't know if it's today or tomorrow, but their bond buying is going to stop. So that's going to be, they're pulling the plug on liquidity that we've been talking about for really weeks, that the pool is going to be draining. And then that's going to put it's going to take a while for the market to adjust to that new reality. And so I think from that standpoint, it's kind of a bearish backdrop whenever liquidity drops. And you've probably seen, if you poke your nose around, FinTwit or Twitter or different articles, there are a lot of them out there that say you buy the sound of cannons, meaning you sell the rumor of war, but then when it actually starts, you buy it, right? And we kind of saw that last week. And then they give some historical examples going back to the invasion of Iraq, going back to the Gulf War in the 90s, showing that prices generally go higher. But one thing they failed to mention is that was within on those two occasions at least, I can't speak to the Vietnam War and way back in time, but at least on the most recent occasions, the Fed was in QE mode. They were dropping rates. Crimea was the other one, 2014. You'll remember, I mean, obviously the Fed was in QE mode there as well. So when they say buy the cannons, that was coincident with Fed lowering rates. We don't have that this time. We have a Fed that is about to embark on a rate tightening cycle. So while we still have a couple weeks to go till that announcement is made and we find out the lay of the land, we do have a fundamental backdrop aside from the war to take a view that as the Fed begins to tighten, the liquidity is going to go down. It's going to make it tough, generally tougher and more choppy on the market. Now, we also know that VIX, with last night's move, is jumping up again. After 2 days of coming down off the highs, which were like 37, back down into the 30 range, they're going back up again. Now, it remains to be seen, how high or how far that may go. But just to remember things you can do as a trader to combat that. Number one, trade fewer positions when things are crazy. That'll, just by the simple fact of having fewer positions, will dampen the volatility on your P&L. The next one is trade smaller. If you're in a higher volatility environment, you can trade a smaller amount and make the same amount of money. So again, trade smaller because you're going to have wider stops than you would with a VIX at, say, 15. You're going to get a lot of whipsaws. And if you keep your stops really, really tight, then you're just going to get stopped out a lot and be, very frustrated. Also, in the higher volatility environment, your options are going to be more expensive. So usually in that situation, you're going to want to, instead of buying just, a call or a put, you want to do a spread. Why? Because the higher implied volatility, you want to usually be selling something so that at least the short leg of the spread that you buy will counteract the decay in the one that you're long. And then, of course, you can go to the other extent. Say you think a stock is going down. Instead of buying a put spread, you can sell a call spread above it. That's just the exact reverse of what you could do in a bull market. Instead of buying calls, you can sell a put spread. And if you're right on direction, those put spreads will simply decay to zero, and then you get the premium of what you sold it for. So I hope those little tips help today, because this can be a really, really frustrating environment, and that goes for everybody, experienced guys, new traders. It really doesn't discriminate on that basis. So let's get into the charts. Here we've got SPY daily. We've got a downtrend line. Of course, we had the initial plunge. Then we had the kickback rally, which got rejected. And now we put in this vicious kickback right into the 200 with the downtrend line just above. So I think on SPY, you can use this downtrend line and the 200 to inform your trading. If we recover this morning's losses, come up, take out the 200 EMA right here at 437.5, then break above the downtrend line, there's a good chance you could get a rally into 450-ish. I really think a good line to use is 440 here. That can serve as a breakout level for you, and then you can take it long above if that's what you want to do. And here's a little bit more resolution on it with the SPY 2 hour. Here's our downtrend line. We've got the 50 EMA that's coming over from the daily chart. So now we've got overhead resistance right at 440 at the downtrend line. So if price were to break out there, we've got a little gap to fill, and then the 50 EMA coming in right at 450. And I think that would be a place that would take on a lot of technical importance, because if you, going back to the daily chart, if price were to take out 450 and take out the 50 EMA, that would be hugely bullish. Why? Because then price would be above all the moving averages from the 100, the 820, and the 50. Price would be above them all, and then you could use 450 as your line in the sand as a major pivot to be long above all that stuff going forward. And then here's a 30-minute chart, just gives you some extra resolution. Of course, we're going to have a gap down most likely this morning, so you'll need to mark that gap. And then if price moves in to that gap, you can be long for a gap fill if you're actively trying to trade that. Qs. Same kind of look, but at different levels. We've got the downtrend line here coming right in at this 345 level, really about 347, I'd say. Break above that, then you've got 350, you've got a gap, and then you've got the 200 EMA down here at 361. That's going to be major resistance. And then you've got the declining 50 just above that will be major resistance. So Qs have a lot more work to do, especially in comparison to the SPY. And we know that a lot of the selling pressure has been focused on the Qs. Here we get some granularity on the 2 hour. You can see price coming right in to the 2 hour downtrend line with a little flag from Friday where price stalled, where price ran into that downtrend resistance, was not able to take it out. Today, you get a break above that level. I see price being able to run up here towards 353, potentially fill that gap, and then move up towards the 50 EMA. But I think it's going to be some tough sledding on the Qs. And here you've got some micro levels on the 30-minute chart. IWM, remains in a bearish posture, even though we had the big bounce. Now we're up here at 202.50. We've got price was able to take out the 8 and the 20 day. Now it's at 202.50. We've got the declining 50 day that comes in at 207, and then we've got the 200 above. I think these resistance levels are going to hold here, and I would say, you know, if price got back into 210, that would certainly be a place to be layering on some shorts, keeping in mind you had the potential to go up here and fill this little gap, but I don't think it's going to get there. I'm just putting trust in the charts. This is a very bearish setup. You've got 3 or 4 big levels that price has to get through in order to flip the chart bullish. It's got this 202 level. It's got the 50. It's got the downtrend line. It's got 1 year resistance at 210 from this giant consolidation range. Then it's got the 200 way above up here at 213.59. I don't think it's going to be able to do it. We'll wait and see. More granular resolution on the 2 hour. You can see clearly the levels. You can use that in your active trading right along with the 30-minute chart. And these are just going back to last week. You know, if you were watching your charts and paying attention, you had several opportunities where you could have bought it. I mean, even if you didn't catch this low, you know, a recapture of 192 was a place, and then the breakout and recapture of 196 was a place to buy, and then 198 was a place to buy, right on up the road, because recapturing levels from below are always bullish, and also you broke downtrend resistance, and that was really important. If you're new to the channel, thank you for spending some time with me this morning. I put a lot of effort into finding these pivot locations where you can focus your attention and work on your execution. I think that's the way you're really going to improve your trading, is honing your execution skills. You know, having the right lines on the chart do make a difference, and that's what I hang my hat on. That's why I'm here, to kind of set the table for you guys to execute around. So if you appreciate that kind of analysis, please hit the subscribe button and the alarm bell for post notifications, and also give me a thumbs up. Pass the link along to others in your trading circle that may benefit from the analysis. Also, jump over in the show notes. You'll find a link to the blog site where you can drop in your email, and that way, anytime I produce content, morning, noon, or night, you'll get it in your email box. And also you get an invite to our trading room. So glad to have you with us. That would be great. Hope to see you soon in the trading room. So Facebook, we know about the rug pull. We made a fresh low last Thursday. We put in a little bounce. I've dropped in the Fibonacci retracements, and I think you've got a good line right here at, let's call it 215. If you want to give it the benefit of the doubt, 216 or 217. But you break above that level, then your target is going to be up towards 227.50 and possibly 237 back here where price dropped down out of the big gap. But so it's broken downtrend resistance, and now it's kind of looking to find levels overhead. Apple, we had been operating up in this range where these levels had done an excellent job for us. Now those levels that were once support are now resistance. We're up here at this 165 and a half level. I think that's your pivot for today. At the 618 retracement level. Break above that, I think you got a shot at 167 and then 168.50. Now, of course, I haven't looked at the charts this morning, but I can only assume that they're down. You've got the top of the old gap here at 163, and then you've got the bottom of the gap at 159. If things start to roll over, those would be levels to look for support on the way down. Tesla lost this long trading area, lost the 200 at 861, came down here to 700, put in a big bounce. I think 800 is your pivot, with 830 being your next target, and then your second target being the 200 at 861. And if you were looking for a longer term go, no-go line, there's nothing really better than the 200. If it can recapture it, you can stay long against it. If it rejects, you can get short against it. And I think that's a great pivot to use, especially if you're trying to swing something, for a number of days or weeks. So the bulls really got to recapture the 200 to be in any kind of business whatsoever. Okay, Microsoft, nice rebound all the way up here to this open gap here at 297.50. It's about $2 wide. You've got some bigger resistance at 300. See a rejection here, here, here. Support, support, support. On a break at 300, I think you can look for 308 and then 311. But as we've discussed, it's going to open lower. And then we've got these levels going back down as support on any kind of sell-off today. Back here at 393, then 293, and then 290 was a real big level that back in here had a lot of tests and rejections. Finally broke through, but now 290 I think would be a really good lower pivot to focus on, just because there were a lot of reactions along that line. You can see that here. So 290 will be important to hold on the downside if more selling comes in. Amazon, we're right back at 3,100 again. I think that's your pivot. And then pretty much $50 increments. We're back to the free 50 club. You break above 3,100, I think you can expect 3,150 and then 3,200, etc. $50 increments. If you lose 3,050, then you're coming back down towards 3,000, and we've got a pivot in this area of 29.80 on Amazon. Google sent a note out. Let's look at the daily chart. 2,700 here is a really, really big level to get on the right side of the chart. And then the next most important level here is the declining 50 at 27.50. So price took out the downtrend line, took out the 200, two very important hurdles for the bulls, and now the last really big objective is to get price above all the moving averages, including the 50 here at 27.50. Break above that, then you got 2800 and 29, 25-ish if things get really bullish. But some really important technical milestones here in the next day or so for Google. Netflix daily came down, bounced into the gap, came down, put a double bottom. Notice the bullish divergence here on this double bottom. We had a second low here at 360, but PPO momentum was much higher and RSI momentum was higher as well. So that tells you got some buying under the surface. We're back at this 390 pivot. I think if you can break above, you can get up to this 410 area, and then 410 is a really, really big level that would open up then 460 towards the bottom of the old gap. And of course, on the other side, you break 360 to the downside. That's going to bring in a lot more sellers. SMH, semis, really big bounce. Back in here to this 269, 270 level. You can see there was some reactions right along this line. Rejected, rejected. Support over here. Rejected in here. So I think as long as it stays above this 269, I think you can be long and then look for overhead resistance around 274. Then you've got a gap at 276. But remember, we're going to open down. So there's support around 266 and 262. We will open with a gap above. And then what you got to do is to employ those gap rules that we do each and every time we have a gap either above or below price on the open. Now, I wanted to show you some other charts of interest. I showed you this MP Materials weekly chart last week. They are the only U.S. producer of rare earth minerals. I think, well, I like the chart. If it can break out here above 47, I think that's going to be a good long. I think as more and more focus gets put on having an infrastructure and supply chains that are robust, especially in strategic areas where the rare earths would fall, I think there's going to be more and more interest in them. You know, the end of the day, though, this is a setup on a chart, not a big fundamental analysis, because that can take years to play out. All I'm saying here on the weekly is if we can get a breakout here above 47 on the weekly chart, I think it's a nice swing long, and I'm going to be taking that trade if it presents itself. We also had a breakout on the weekly in Freeport-McMoRan, which is a copper miner. Big $40 leg, long, nice consolidation. Now just breaking out on Friday above 44. I think I would want to look and see how that does today, if there's going to be a downdraft. But weekly breakout, you notice up here during the consolidation, never lost 50 on RSI, and momentum has done a big reset and also never dropped below the zero line. So those are real positive technical factors. Another industry group I want to bring your attention to is steel. DJUSST is the industry code. I have most of those plotted that I watch. Got an emerging breakout in steel on the weekly, and so we had a big run up. Now we've had really a year of consolidation. If you go back here, here's March of 21. Now we're starting March of 22, and it's just starting to break out. Notice that PPO has reset right at the zero line and has put in a bull cross. So that's very, very encouraging. And you had a big reset on RSI where it was above 50, did a brief dip below, and now is pointed higher. I like the way that looks. I just picked out a couple charts here. Here's ATI. You could probably look at this as a big cup and handle, or simply a corrective move and a breakout. But I like it here above 25 on the weekly chart. Here's Vale. I also wanted to show you this one looks strong. Hasn't broken out yet. I wanted to show you what was the one? Oh, Steel Dynamics. Here's Steel Dynamics on the weekly. You can see that it too has had a year-long consolidation. Now it's broken this little downtrend line, reset on PPO, breaking above on RSI. Really, I like this setup against, say, 65 on Steel Dynamics weekly. You may want to look at BHP, Rio, US Steel. The whole group is perking up. So take a look at that. You may find some charts in there that are better than the ones I presented. But birds of a feather usually flock together. And if the industry group is breaking out, most of the stocks will be making positive moves. So let's wrap it up there. Don't forget, higher volatility. Try and sell something. Trade smaller. Use put spreads or call spreads to handle that increased IV. You're never going to be able to trade war headlines. Focus on the Fed. Focus on your charts. And I think we can get a handle on the markets and get some good objective trades. And if you're not comfortable, by all means, do not trade, because if your head's got to be right before you can have any chance of trading successfully. And a lot of times the best trade is not to trade at all. So keep that in mind, and if that works for you, just let some of the vol come out and then pick up the ball when you're comfortable. This has been Chris Buss with Traders Profit Compass. Have a profitable day of trading, and talk to you next time.